Good evening, everyone. Time for another silver update. This is the 10-minute chart of silver provided by netdania.com. You can click on the link below. And you can see I've highlighted the point where Bernanke made his comment, and simultaneously the silver market tanked with a huge number of COMEX contracts being dumped on the market. So we're still, you can see we're still just recovering from that, and we seem to be rounding down from there. So it was clearly the Bernanke comment that turned this market around. It was rallying, looking to go above 30, and we're going to address that again when we look at the top story of the night, which is Ted Butler's latest in his coming out, basically stating that the government's behind the silver suppression. So we'll examine that later, but first let's look at the question of the night, and that is from Dragonfly Doji, and he says, hey, Brother John F., have you heard of the TEM network being used in Volos, Greece? If so, what are your thoughts? TEM is Greek shorthand for alternative local currency, and from what I understand, it's based on barter and earned credits and mainly ditching the euro or any central bank before it ditches them. Could it be as simple as that? Of course, anyone with wealth will still need to attempt to protect said wealth, but what about those without, or those not prepared, or those outright robbed, which will be many? Anyway, I heard this story and found it quite hopeful. I follow Chris Duane as well, and he sees the central banks being just completely ignored, and locally is where we're going to see real change with a communal pool of resources. And this story really confirms that. Thoughts? By the way, I'm learning to give haircuts, not kidding. Keep up the hard work. Been following you for years. So this is the TEM story, and there's a lot of barter currencies. There's one I covered that was in Connecticut, I believe, and there's a lot of local barter currencies, and this one is getting fairly popular. This is a story that he linked from the 14th, and it is, I'll read a little bit of this about this TEM in Volos. Buyers and sellers gathering in sweltering previously abandoned building in the Greek city of Volos, some 200 miles north of Athens. There's a bit of everything available: books, eggs, clothes, kids' toys, and even an old fax machine. But there isn't a euro in sight. On the eve of the vote, which may determine whether Greece stays in the eurozone, these Greeks have moved beyond the euro, at least here. This market is a brainchild of a network of people who have chucked the euro in favor of the TEM, Greek shorthand for alternative local currency. Quote, in the network, people can trade their goods and services. They don't need money for that. They just need time and the desire to do it, said Christos Papianou, one of the network's founders. It's kind of like bartering on steroids, he said. And then it goes in to explain it, and this credits, you earn these credits, and you can start off with, I think they said you start off with 300 or something. Or no, you can borrow 300. Let me find that. That was actually in another article. But again, this is the same weakness with this TEM is the weakness with all these alternative currencies. And I just find it a little bit surprising that they didn't try to use something like the Bitcoin. Not necessarily doesn't have to be a Bitcoin. It could be anything else, but this suffers from the problem of all currencies, which is who is in control of the currency and who gets to say how much of it is created, and then, how do people trade and value things. For example, in this article, they say, we can see it exchanging favors. I do a service for you, then you owe me a favor. I can use that favor to get some service from someone else, so we don't have to exchange directly. I can get it from a third person. Let's say someone offers a haircut. The network determines that's worth 10 credits. Okay, there's there's the big flaw of these sorts of things here. You do not want to have the network determining what something is worth. Is every haircut equal? What if someone is really poor at giving haircuts? Someone is really good. So that's a big flaw to have these assigned prices. You have to have a free market in people being able to determine the value of something by what they're willing to spend. You can't have this centrally planned economy like this. It just simply won't work, and the pricing mechanism will be broken, and the thing will end up being worse than the government system they're trying to get away from. So it's an interesting concept. It definitely needs some work. They need to borrow some of the ideas from Bitcoin with a limit on the number that's locked in, and some kind of anti-counterfeiting mechanism built into it. If that's not there, then you're totally at the mercy of the people who administer it, and you can see what's happened with the Federal Reserve and how that's worked out. So that's that issue, and like I said, there's a number of these competing barter currencies already in the United States. They don't seem to be a real big threat to the powers that be just because of their limitations. Now, to the story of the night, and the reason why I put that arrow there of Bernanke and what he did is because Ted Butler has come out and he's now claiming, I'll read some of this, not all of it, that the answer to the question of who is manipulating the silver market is that it's the working group of financial markets. In other words, it's the government doing it. And this is kind of interesting for Ted to come out and say this. Remember, Ted has been kind of, well, he's been the leading light for the longest time saying that there's a silver manipulation, but he's also been one to call for people to write the CFTC, write Congress, go through the system, and try to get things changed. Looks like he's finally just fed up, so he's coming right out and saying that it's the government doing it. So let's read some of this. Please read this article carefully because I'm disclosing for the first time that the U.S. government has given J.P. Morgan the green light to manipulate the silver market. This fact explains the shenanigans in the silver market and answers all the questions and exposes this tawdry affair for all to see. The scandal recently became more outrageous. The June bank participation report as of Tuesday, June 5th, along with the commitment of traders, confirmed that J.P. Morgan's silver short position has increased by at least 5,000 contracts in the past 2 reporting weeks. That's the equivalent of 25 million ounces of silver, truly an enormous amount in a 2-week period, and about equal to all the silver produced and consumed in the world in the same period. I calculate J.P. Morgan's net short position in COMEX silver futures between 16 and 17,000 contracts. J.P. Morgan has been the sole net commercial silver short seller over the past 2 weeks. That is the clearest proof yet of manipulation. A market dominated by one buyer or seller is the ultimate definition of manipulation. And I'm going to skip down to where he goes into his reasoning of why he's saying that it's a working group on financial markets. He comments about the fact that he's been baffled how the CFTC chairman Gary Gensler can preach about regulatory reform and yet not step in and do anything about the clear manipulation of silver. And his explanation is that it's a working group on financial markets. So let's go over that. He says there are 4 members in the working group: the Federal Reserve Chairman, the Treasury Secretary, the Chairman of the Securities Exchange Commission, and the Chairman of the CFTC. The Treasury Secretary is the chairman of the working group. The purpose of the group is to promote market stability and prevent disorderliness by working with the exchanges and major market participants in times of stress. Such a time for the financial markets existed in March 2008 when the investment bank Bear Stearns failed, and undoubtedly the working group was heavily involved. The group, along with exchanges and major market participants, oversaw the transfer of Bear Stearns' giant short positions to JP Morgan, in the process indemnifying JP Morgan from any concerns of dominance and overt control of silver and gold prices. As a result, JP Morgan orchestrated and was the biggest beneficiary of the more than 50% decline in silver prices into late 2008 with the working group's permission. Things then quieted down in silver until the fall of 2010, when prices started to make an historic move in the late April 2011 price high near 50. At that point, JP Morgan's giant short position began to hurt, and it moved to cover some of the silver shorts into the very top. At that point, it looked like JP Morgan would get crushed by the physical silver shortage and the growing losses on their short positions. Instead, JP Morgan appealed to the working group for relief, and working with them and the CME caused the silver market to crash starting on Sunday night, May 1st. Later, the working group teamed with JP Morgan and the CME to smash prices by 35% in 3 days in late September 2011. The President's Working Group on Financial Markets answers all my questions. It explains why JP Morgan and the CME remain silent about allegations of manipulation. They've been given legal cover by the working group. This also explains why the CFTC says they are conscientiously investigating silver when it is clear they are not. The agency can't come out and disclose silver was smashed with full knowledge of the working group, so it pretends to go through the motions of investigating. What is going through Gary Gensler's mind? Is he not tormented by the blatant silver manipulation which runs contrary to all his public utterances? Commodity law is being broken. If my analysis is correct, what does this mean for silver from here? It will prove to be wildly bullish for the price. Maybe not immediately, but on a long-term basis. It sets the stage for the really big move in silver. This overt government interference in the silver market will boomerang at some point, just as every attempt at artificial price setting has failed. Just let the word start to spread about working group involvement in causing the price of silver to fall, and the natural reaction by the world's investors will be to take advantage of the bargain created. This is an attempt by the government to influence the price of silver lower by favoring the paper short sellers and not by dumping physical silver on the market. That's because neither the U.S. government or any other world government has any physical silver to dump. All the working group can do is aid the paper silver short sellers by permitting vicious price sell-offs designed to scare existing holders. There's an easy way around that scam, and that is buying real silver, not the junk represented by COMEX paper contracts. If, as, and when the role of the working group in silver manipulation becomes known, the best reason yet for buying silver will come into focus. And he concludes that silver should not have anything to do with their manipulations, but nevertheless it does. So, very interesting to have Ted come out and say this. A lot of us have been saying it for a very long time, that it's the Fed. I think I did a video one time called "It's the Fed, Stupid." But it's interesting that Ted is now coming out and saying that it's the Fed, the Treasury, the SEC, and the CFTC doing it. So it's the same conclusion that Gaddis reached about the gold market, that the government is intentionally suppressing the price of silver. Now, of course, the role of JP Morgan is the lead role. And I did want to take you over to a story. I didn't have that queued up, so we'll find it real quick. On JP Morgan, that was covered by Zero Hedge, and that is 4 bullet points explaining how JP Morgan doubled its money from the MF Global collapse in 7 months. And he says, don't read this if you have high blood pressure or a client of MF Global whose money is still held by JP Morgan. So this is the timeline he gives here. JP Morgan is put on MF Global Bankruptcy Committee November 7th, 2011. 2 weeks later, JP Morgan buys MF Global's 4.7% stake in LME for $39 million in a competitive bidding process. 7 months later, on June 15, 2012, The LME gets an offer for 2.2 billion for from China's HKEX, making JP Morgan's stake worth 103 million. JP Morgan makes over 100% cash on cash return in 7 months, while MF Global money is still stuck at JP Morgan. In the meantime, John Corzine was and always will be a free man. P.S. The topic of why China is buying the world's biggest metals exchange, one which is a lovely harbinger of things to come, 2 months ago very symbolically replaced sterling settlement with renminbi, is a different matter entirely, one which may have to do with the fact that domestic Chinese companies have unprecedented stockpiles of everything, pledged as collateral everywhere, collateral whose prices would be easier to manipulate if one also controlled the exchange where they all trade. So that is just absolutely shocking. You can see that pretty much JP Morgan grabbed the money from MF Global customers and ended up making a killing on their MF Global stake and is involved in this selling off of this LME to the Chinese. So it's absolutely insane what's going on. JP Morgan pretty much seems to have a ticket to do whatever they want. And so that goes to support Ted Butler's conclusion that JP Morgan pretty much is allowed to do anything they want as long as they continue their manipulation of silver. So fascinating stuff coming out. It sure seems to be like it's near the end of the game if this kind of stuff is going on. In kind of a backhanded way, maybe this attack against MF Global by JP Morgan was kind of a warning shot, because basically it had the effect of punishing speculators in commodities. There are people like Gerald Celente who lost their gold contract, etc. So it makes perfect sense that they would allow JP Morgan to come in and destroy MF Global, because MF Global was, I believe it was Lynn Waldock before, but it was one of the big places where the public could trade futures, and if they wanted to buy silver contracts, they could buy them there. So it's interesting that JP Morgan was allowed to come in and wipe out MF Global, and that fits right in with Ted Butler's comments. So the silver chart also confirms it. You can see my arrow at the Bernanke, that it's pretty clear that Bernanke's speech was a green light to go ahead and just smash the price of silver, selling a ton of paper contracts. We also had a ton of volume here, and we had another little smackdown here, and we're still testing to see if we're going to go back down again and test for a fourth time that 26 area that we've now tested 3 times. 1, 2, 3. We'll see if we get a fourth test in the coming weeks, and we'll talk to you next time.